For my recording this topic, bank reconciliation, I will split into 3 sections. First part one is a note. Second part and third part will be the question that I'm showing you the step how to resolve the question. Okay, now let's start. Bank reconciliation. At regular interval, the bank balance in the cash book should be reconciled with the balance shown on the bank statement. What is a bank statement? Bank statement is a document provided by the bank to the customer, to the bank customer. Normally it's end of the month. The bank will send out the statement. You will receive in the early of the month. So we will do the bank reconciliation in the early of the month. Any differences, we will do the adjustment or so-called update the cash book. Subsequently, prepare the bank reconciliation statement. This is to show that the correct amount in our bank account. A bank reconciliation statement does not form part of the double entry recording of the business because this is a document we prepared. It's just to make sure we have updated cash book, and if any error by the bank, we inform the bank. Why there is a differences between the bank statement balance and the bank account balance? There are few reasons. One of it, the common reason, timing difference. Timing difference is referred to that when the bank do the recording in the debit side or the credit side, depending on when bank receive the document. That means whether the business have made a payment, when the payment, and when the transaction taken place. Item on the bank statement that have not been entered in the cash book. Sometimes bank will charge us the bank charge, give us the interest. Sometimes there is a direct debit. All this type of transaction, we will not know until we receive the bank statement from the bank. Okay, now next. For the bank statement, we have the so-called statement format. Normally, they will have a 3 column in the bank statement. And the 3 columns show the value. Then there are 2 more columns in here. It will show the date and the detail. The details, sometimes you don't know what they're writing because they are all referred to the bank trust. Bank will understand it, the statement detail. But sometimes we were able to see other detail which is typed, key in by the payee or payer. Okay, for the bank account, debit side in our recording, it will appear in the credit side of the bank statement because from our side, when we receive money, we will debit. But to the bank, when we go to bank and put in the money, to the bank treated us as their trade payable. So that's why they recorded in the credit side. Whereas in our bank account, credit side will be, we are giving out the money, we are paying out to somebody, it will put into the credit, but to the bank, they will debit because this one is that we reduce our money, so they do not owing us so much money. Next. What is a bank statement? A copy of the account of the business as appear in the book of the bank. This is from the viewpoint of bank. The business depositing money is a trade payable liability to the bank. Bank account, the bank account in the cash book prepared from the viewpoint of the business. The bank is a trade receivable asset of the business which has deposited the money. Okay. Usefulness of the bank reconciliation statement to revert the correct amount of the cash at the bank. Without reconciliation, the cash book and the bank statement balance may be misleading because when you receive the bank statement, normally you have one amount which is normally will not agree, okay, because the transaction taken place due to the timing difference most of the time. Ensure that the correct bank balance is shown in the statement of financial position After we updating the cash book, we will have the correct amount to show in the statement of financial position. As a control, because the person issuing the check or person in charge of the bank account may have accidentally make a mistake or with the intention to make a mistake that will cause the bank have the amount taken out without unknown by the owner. Or could be also one of the reason as a control, unintended overdrawn on the bank account can be awarded, because when we do the bank reconciliation, we know what is our updated cash book, what is our actual money in the bank at the point of we do the bank reconciliation. A surplus of the cash at the bank can be highlighted and invested in to earn interest. So if we foresee that we're going to have an extra cash in the bank, we will foresee few months we won't use it, we can put into the fixed deposit. If the reconciliation are prepared regularly, errors are discovered at earlier. That means either bank or the person in charge of the bank account, we can detect the error, then we can adjust it. This it could be unintentionally the error made. If the reconciliation is prepared by somebody or other than the cashier, the risk of frauds means that the intention to cheat the money can be reduced. This is to as internal check to prevent the fraud happen. Okay, some definition to understand about this topic. One of it, dishonest check, which is a check refused paid by the bank. There are many reasons that cause the dishonest check. One of the could be the reason is a fund and an insufficient fund in the bank. So the bank can not allow you to take the money out. Or it could be that you forgot to sign. The signature forgot to sign by the owner or by the authorizer. So this can cause the bank refuse. If your check payment on the check and the wording that wrote on the check are different, bank will reject it. Even the payee make a mistake also can cause the bank refuse to pay the check. Next, check not presented, check paid by the bank, but which has not yet presented to the bank for the payment, not yet paid by the bank, which is that means that I'm issue a check to you, which is from my business point of view, I already given you the check, I already pay you the money, but you did not go to the bank to put into the bank account. That is called check not yet presented from my point of view. From your point of view, you would treat this as a check not yet credited because you haven't go to bank to put in. Check not yet credited means that the check that I received from somebody paying me the money, but I had no time to go to the bank. Or maybe because of timing difference, cause the check not yet clear into my bank. Standing order. Standing order is an instruction by the customer to the bank to pay the fixed amount as a stated date to a named person or firm. Normally, standing order, you have a fixed. What is the fixed? In terms of the date payment, in terms of the amount. So that easier. You instruct bank just do one-time transaction, and then after that, they will easily follow the date, then they set into the system, and then they can auto transfer out your money. Direct debit is an authorization given to the bank to make payment, which is, for example, I'm using the DG service. My mobile phone every month, DG will take my money out. Okay. After that, they will send a message to me, SMS, telling me that the amount that I spent for this month and how much I have paid and how much is taken from my bank. That is called direct debit. This is an instruction you give people to take money. And normally this amount is not fixed. The amount normally is not fixed, depend on your usage. So standing order suitable to be used for the renter because it's a fixed amount and you don't need to worry. Just give instruction to the person who you want to pay to. Okay, the stage of the bank reconciliation statement. Compare the bank account in the cash book with the bank statement. When you receive bank statement, you can start to prepare the bank reconciliation statement. After you check already, then you update the cash book. Whatever that appear in the bank statement yet to be recorded in the cash book, you have to update in the cash book. Subsequently, correct any error in the cash book. When you saw that there's an error made in the cash book, you do the adjustment to the general journal. Balance the cash book and carry down the balance. So you have the new balance. After that, last, prepare the bank reconciliation statement. So when you prepare the reconciliation statement, this all the item most of the time is happen from the cash book that you already debited or credited, but bank statement did not appear. There is an item we need to put into the bank reconciliation statement, which is taken from the cash book. Most of that, unless there is an error by the bank, then you also have to put into the bank reconciliation statement. Okay, let's continue. Okay, general item that to be shared. Item in cash book not in the bank statement. Check not yet presented. Amount not yet credited. Error in the cash book. Item in the bank statement but not in the cash book. Bank charge, bank interest, dishonor check, standing order, credit transfer, direct debit, error on the bank. These are the item which is when you have this all the item in the bank statement but not yet appear in the cash book for this account, okay, except this one, error on the bank statement. So all these item you have to update the cash book. Then only you have updated cash book. Whereas the item appear in the cash book but not in the bank statement, for example, check not yet presented, amount not yet credited. So you were going to do the bank reconciliation statement. So this will appear in the bank reconciliation statement. This error on the bank statement also will appear in the bank reconciliation statement. The format for the bank reconciliation statement. You have two ways for it. Either you want to start off from the bank statement. If you start from the bank statement amount, then you add check not yet credited or amount not yet credited, less check not yet presented. Whereas for the error in the bank statement can be add, can be minus, depending on the question. The last for the cash book. So in the exam, in case that when you do the calculation, if you start from the bank statement and finally you cannot get this updated cash flow amount, you still have to put according to the updated cash flow amount. So that is the thing that you need to take notes. Even the bank statement also must take the bank statement amount as a close. Another way is the other way. You start with the updated cash book first, and you add check not yet presented, then less check not yet credited, and add or less error in the bank depending on the question. Last, bank statement. This bank statement normally in the question, they will give you the answer, they will give you the number, so you must follow the number, don't change the number. Okay, this is one example that if you have a lot of items, take notes that after you write the header, don't forget to write the detail of the individual, and the first column is the individual item. Second column is a subtotal. Okay, now we have done the bank recon. Now we're going to do the exercise. Okay, so give me a minute.